Welcome back to Talk Tickers. You know what we do here, break down these earnings calls so you don't have to. And today we're going to be diving into Carnival Corporation's Q4 2024 report.
Definitely a big one. It seems like everyone's talking about this stock right now.
Yeah, big moves for sure. Carnival ended the year strong, beat those earnings expectations again, 7th straight quarter of record revenue, and the stock price jumped over 6% in a single day.
That's wild. Guess you could say people are ready to set sail again.
Yeah. So let's look at the why. What's fueling all this?
Well, demand for cruises is just through the roof. I mean, we're seeing all-time highs for bookings and customer deposits.
And is this just, leftover wanderlust from the pandemic years? Or are we seeing something else, something new?
And I'd say it's probably a bit of both. You've got that pent-up demand still working its way through, but there's also a whole new crowd discovering cruises, especially younger travelers looking for those, unique experiences.
That curated Instagrammable vacation.
Exactly. Okay, so diving into the numbers a bit here. Carnival reported adjusted earnings per share of $1.26 on revenue of $7.9 billion. So that's a revenue increase of 15.2% year over year. And their net income jumped up 61.55% year over year to $1.74 billion. So things are looking pretty healthy, wouldn't you say?
Yeah, these numbers are impressive. Yeah, really impressive. I think it shows that the entire cruise industry is bouncing back.
Oh, yeah. Cruises are back, baby. But, it's one thing to just ride the wave and another to navigate it properly. And I think one of the ways Carnival's doing that is through yield management. They reported a record 11% yield for 2024, mostly driven by higher ticket prices.
So for those of us who don't speak Wall Street, can you break down yield management in the world of cruises and why is it so important?
Sure. So yield management is basically the art of squeezing every last dollar out of your available capacity. You're strategically adjusting prices based on demand and how many cabins you have left to sell.
So it's like a balancing act. You want to fill every cabin,
Yep.
but also make sure you're charging the highest possible price.
Exactly. And it seems to be working. Their yield growth is actually outpacing their cost increases. Pretty impressive.
Okay, so we've got booming demand, smart pricing strategies. What about some of those tangible things that are driving Carnival's success? What are they doing on the ground?
Well, they've been steadily adding to their fleet. Welcomed 3 new ships in 2024, Carnival Jubilee, Sun Princess, and Queen Anne.
Right, but it's not just about new ships, right? Even if you take those out of the equation, their yield still jumped almost 10% compared to last year. That's telling us there's a real hunger for those existing cruise experiences they offer.
Definitely. I think their marketing is hitting the mark, too. Did you see that Princess Cruises campaign with Hannah Waddingham?
Oh, the Ted Lasso star. Yeah, that was smart.
Totally. It's like they're playing on that Love Boat nostalgia, but giving it a modern twist, bringing in new cruisers while still appealing to the old guard.
That's such a good point. And speaking of appealing to new crowds, what about those private destinations? Renaming Half Moon Cay to Relax Away Half Moon Cay. And then there's that brand new Celebration Key opening in 2025.
It's like they're creating their own little slice of paradise. And it's working. They're seeing a noticeable price premium on bookings that include Celebration Key.
Which makes sense. You're not just selling a cruise, you're selling a whole unique experience. And that's got to be a big draw for anyone who's maybe a bit hesitant to try a traditional cruise.
Yeah, you get it. It's like, come explore these amazing destinations, but only with us.
Smart move.
Totally.
Okay, let's switch gears a bit and talk about the financial side. Carnival has been really aggressively paying down debt. They've knocked off over $8 billion since early 2023. That's huge. And their leverage is looking much better, on track to hit investment-grade metrics in the next couple of years.
That's a big deal for investors, shows they're serious about strengthening their financial position, and it gives them more room to maneuver, invest in growth opportunities.
So it's not just about cutting costs. It's about strategically positioning themselves for the future.
Exactly. They're playing the long game here. And investors are taking notice.
It's a really promising picture so far. But let's be real, are there any potential headwinds? Anything we should be watching out for?
Well, there's always something. There's a proposed passenger tax in Mexico that could throw a wrench in some itineraries. And then there's the whole geopolitical situation in the Red Sea region. Definitely something to keep an eye on.
Those are definitely things to watch.
Right.
But overall, Carnival seems to be in a very strong position. They're riding this wave of demand, managing their pricing and costs really well, and making some smart investments.
Couldn't agree more. They're definitely a company to watch in 2025.
And you know what? I think this is a good time to hear from our listeners. What are your thoughts on Carnival's performance? What questions do you have about their strategy? Or even the future of the cruise industry? Hit us up in the comments. And we'll dive into those in the next segment.
Yeah, it's great to hear from everyone. Lots of good questions coming in. And actually, one thing that keeps popping up is, sustainability. It seems like people are really interested in how Carnival's addressing their environmental impact.
Absolutely. And it's good to see them taking it seriously. They're reporting a 17.5% reduction in greenhouse gas emissions intensity compared to 2019. So
Yeah.
they're well on their way to hitting that 20% reduction target by the end of 2026.
Which is great. But what's even better? They've actually managed to lower their absolute emissions, like not just the intensity. Actual emissions are down almost 10% since 2019.
Yeah, that's huge,
Mm.
especially when you consider, how much they've grown in that time. It shows they're making real progress. And, it's not just about being good for the planet, it's also good business. Consumers are becoming more and more aware of these things.
Yeah.
They want to spend their money with companies that align with their values.
Absolutely. Okay, so let's shift gears a bit. Back to those financials. We were talking about how Carnival's been paying down debt aggressively.
Yeah. They ended 2024 with $27.5 billion in debt. So that's down over $8 billion from their peak back in January of 23, which is pretty remarkable when you consider that they've also been investing heavily in growth, like those new ships we talked about,
Yeah.
and Celebration Key.
Yeah. They're clearly generating a lot of cash, enough to both pay down debt and invest in the future.
A good sign. And their net debt to EBITDA ratio has improved significantly too, down to 4.3 times from almost 7 times last year. So they're on track to reach those investment-grade leverage metrics by 2026.
Which, as you said, that's a big deal. Lower borrowing costs, more financial flexibility. But it also sends a strong signal to investors about their stability and their long-term outlook.
It's like a stamp of approval. And their CEO even hinted that, once they hit that investment-grade status, they might start thinking about returning value to shareholders, dividends, share buybacks, that sort of thing.
Which would definitely make investors happy. But even without that, the stock's been doing well, up over 6% since the earnings release.
Yeah, and that's not nothing. Especially in this current economic environment. Interest rates are still climbing, inflation's a concern. It seems like Carnival's weathering the storm pretty well.
Yeah, they're definitely outperforming a lot of companies. Okay, so let's look ahead a bit. What's their outlook for 2025?
Well, they're projecting continued growth, expecting net revenue yields to increase by about 4.2%.
So basically, they're expecting strong demand and pricing power to continue. Makes sense.
Yeah. And despite all that inflationary pressure we talked about, they're only expecting their adjusted cruise costs, without fuel per available lower berth day, to increase by about 3.7%.
ALBD. Gotta love those cruise industry acronyms.
Right. So for anyone who doesn't spend their days analyzing cruise industry financials, ALBD basically measures the cost of running a cruise ship per passenger per day. So it's a key metric for figuring out how efficiently they're operating. And keeping those cost increases in check is pretty impressive given the current economic climate.
Yeah, it really speaks to their focus on, streamlining operations, leveraging their scale.
Okay. And their overall net income guidance is even more impressive. They're projecting over $2.3 billion. So that's an improvement of more than $400 million compared to this year.
Yeah, analysts are definitely taking notice. Lots of upgrades and price target increases after this earnings report.
It seems like they're impressed with those strong bookings, the pricing power, and the cost management. And they also see a lot of upside potential from those strategic investments we talked about earlier.
Right, those new ships, Celebration Key, those targeted marketing campaigns. But of course, some analysts are also urging caution.
As they should. There are always risks.
Exactly. A recession could hit consumer spending, especially on discretionary things like travel. Fuel costs are still volatile, and, the geopolitical landscape is always unpredictable.
All valid points. But even with all those potential headwinds, it seems like the general consensus is that Carnival is a well-managed company with a bright future.
I'd agree with that. They seem to be navigating the current environment well and have a clear vision for growth.
Okay, so let's shift gears a bit and get to some of those great questions we've been getting from our listeners. A lot of people are curious about Carnival's plans for shareholder returns. When might they start paying dividends or buying back shares?
Yeah, that's a popular one. And as we mentioned before, their CEO said they'll consider those things once they hit that investment grade leverage target. So probably sometime in 2026. Not immediate, but definitely on the horizon.
All right. Another big question is about fuel costs. How are rising fuel prices going to impact their business?
It's a valid concern for sure. Fuel is a huge expense for any cruise line. But they've got some things in place to mitigate that risk, like fuel hedging programs that help them lock in prices. They're also working on improving fuel efficiency across their fleet. And, that strong demand and pricing power we talked about gives them some flexibility to adjust ticket prices if they need to.
Okay, last question. Someone asked about Carnival's plans for expansion into new markets, specifically Asia.
Asia is a huge potential market for cruise lines, and Carnival has definitely been increasing their presence there. More itineraries, new terminals, that kind of thing. But it's not easy. It's a very competitive market, and Asian travelers have their own unique preferences.
So they'll need to tailor their offerings very carefully.
Yeah, it's a challenge for sure, but if they can crack that market, the rewards could be huge.
It could be a game changer for the whole industry. All right, so we've covered a lot of ground today. Carnival's financial performance, their strategy, and those broader trends shaping the cruise industry.
And thanks to all our listeners for those fantastic questions.
Now, before we move on to our final segment, we'd love to hear your thoughts. What are your key takeaways from this discussion? What stood out to you about Carnival's story? Share your thoughts in the comments below.
It's interesting when you think about it. Carnival isn't just one cruise line. They've got like a whole family of brands.
Oh, yeah, you're right. It's a whole portfolio, 9 different ones actually, each catering to a different type of traveler.
Yeah, it's smart. It gives them a much broader reach.
And helps spread the risk if one segment of the market takes a hit.
Exactly. So you've got everything from budget-friendly options like Carnival Cruise Line to the super luxury Seabourn cruises.
And don't forget those brands that focus on specific regions like P&O Cruises in Australia and the UK, and Ada Cruises, which caters to German-speaking travelers.
Yeah, they're all over the place.
And that global reach gives them incredible scale, which means they have more bargaining power with suppliers and can operate more efficiently.
Right. They're not just the biggest cruise company. They're the biggest leisure travel company in the world. Over 100 ships visiting more than 700 ports.
It's a massive operation, and they've got some stiff competition, too. Don't forget about Royal Caribbean and Norwegian Cruise Line.
Oh, yeah, those guys are always nipping at their heels. It's a constant race to innovate, come up with the coolest new ships, the best amenities, and the most exciting itineraries.
But Carnival's got that brand recognition, a huge loyal customer base, and that global scale we talked about definitely gives them an edge.
And they're not afraid to invest in technology either, constantly improving that online booking platform, the mobile app, and even using AI to personalize recommendations based on your past travel.
Make it super easy and tailored to each customer.
Exactly. So they're doing a lot to stay ahead of the curve. But what about the bigger picture? What are some of the trends that are shaping the future of the entire cruise industry?
One of the biggest is the growing popularity of cruises among younger generations.
Oh yeah, cruises are cool again. And it makes sense. It's a super convenient and affordable way to see multiple destinations without all the hassle of packing and unpacking and finding new hotels all the time.
Plus, it's all inclusive. You don't have to
Yeah.
worry about budgeting for every meal and activity.
And let's be real, cruises are super Instagrammable these days. You've got those stunning sunsets over the ocean, those adventurous shore excursions.
Perfect for the gram.
Yeah, it's all about capturing those experiences and sharing them with the world. But it's not just about attracting younger crowds. The industry is also responding to that growing demand for personalized experiences.
People want vacations that are tailored to their specific interests.
Right. So we're seeing more customizable itineraries with options for foodies, history buffs, adventure seekers, you name it.
And onboard activities are becoming more diverse too. Cooking classes, wine tastings, fitness, boot camps, art workshops. There's something for everyone.
And dining options are evolving way beyond the traditional buffet.
More fresh, locally sourced ingredients and innovative culinary experiences.
Yeah, they're really stepping up their game. And that personalization extends to technology too.
Cruise lines are using all that data they collect to create personalized recommendations, suggest shore excursions based on your interests, even personalize your dining experience.
It's all about making your vacation truly your own. So with all these trends, it seems like the cruise industry has a pretty bright future.
In Carnival, with its diverse brand portfolio, its innovative approach, and its commitment to sustainability, seems well positioned to ride that wave of growth.
Definitely a company to keep an eye on. All right, so before we wrap up today's deep dive, it's time for our favorite segment. This is not financial advice.
The moment you've all been waiting for. Are you ready for an outrageous but plausible trade idea?
Hit me.
Okay, so what if, just hear me out, you went long on a basket of travel and leisure stocks? Not just cruise lines like Carnival, Royal Caribbean, and Norwegian, but also Airlines, hotels, even theme park operators.
So you're betting on the whole travel industry to continue its resurgence.
Exactly. People are prioritizing experiences over material possessions, and that trend is only going to get stronger.
It's a bold move, I'll give you that, but not entirely crazy. If that travel bug keeps biting and people keep choosing experiences over things, this basket of stocks could really take off.
Of course, this is just a thought experiment,
Yeah.
not financial advice. Do your own research, consider your risk tolerance, and all that good stuff.
Always good to consult a financial professional before making any big investment decisions.
Couldn't agree more. But hey, sometimes the biggest risks lead to the biggest rewards. Right. We've had a fantastic time dissecting Carnival's performance and exploring all the exciting developments in the cruise industry.
Yeah, it's been a great deep dive.
We hope you found it informative and maybe even a little bit inspiring. Until next time, happy sailing. And remember, invest wisely.